During his initial term, President Donald Trump introduced a range of tariffs aimed at China to address trade imbalances and safeguard US industries. These actions involved levying tariffs on numerous Chinese products, sparking a trade dispute between the two countries. The purpose of these tariffs was to compel China to modify its trade practices, especially regarding intellectual property and technology transfer. In his current term, President Trump has suggested a 10% tariff on Chinese imports as a component of his America First trade strategy. This directive instructs federal agencies to prioritize American economic interests, with the proposed tariffs acting as a mechanism to decrease trade deficits and promote domestic manufacturing. The administration contends that these tariffs are essential to counteract unfair trade practices and protect national security. Over recent years, the US has also enforced export controls to restrict China's access to advanced semiconductor technologies. These restrictions include bans on exporting specific semiconductor manufacturing equipment and software tools to China. The intent behind these measures is to hinder China's capability to produce sophisticated chips and slow its advancements. In artificial intelligence and other high-tech sectors, US policymakers have voiced concerns that China's progress in these areas could present economic and security threats. Despite the US's efforts to curb China's progress, China has recently unveiled a groundbreaking technological advancement disrupting global financial markets. This unexpected progress has not only disrupted the existing balance, but also seems to be a strategic countermeasure to the tariffs and restrictions imposed by other countries. Rather than retaliating with additional tariffs, China has opted to respond with innovation, launching a product that could potentially alter global dynamics. China has just introduced a revolutionary technology in artificial intelligence, attracting considerable global attention. Reports indicate that this innovation has positioned China as a strong competitor to the United States in the high-tech arena. The unveiling of this new technology has created ripples in global markets, leading to noticeable effects on major US tech companies. Leading firms such as OpenAI, Nvidia, Google, and Meta, formerly Facebook, saw their stock values decline after the announcement, reflecting market anxieties over possible changes in technological leadership. President Donald Trump has described the launch of China's AI platform, DeepSeek, as a wake-up call for American technology firms. He highlighted the necessity for US industries to emphasize innovation to stay competitive in the global AI market. Despite the significant market disruptions caused by DeepSeek's introduction, including a $1 trillion loss in value from the leading US tech index and a historic one-day market value drop of $600 billion for Nvidia, Trump suggested that DeepSeek's cost-effective approach to AI development could be advantageous. He pointed out that achieving similar performance with fewer resources might lower costs for US companies, potentially leading to more efficient innovation. The market crash extended beyond the US, impacting both Europe and Japan as well. In the wake of DeepSeek's announcement, European technology stocks experienced notable declines. For instance, ASML, a leading Dutch semiconductor equipment manufacturer, saw its stock price fall by 7%. In Japan, technology stocks experienced significant declines following DeepSeek's announcement. SoftBank Group, a major tech investor, saw its shares drop by 88.3%. Chip testing equipment maker Advantest, a supplier to Nvidia, fell by nearly 9% on Monday and an additional 10% on Tuesday. Similarly, chip equipment manufacturer Tokyo Electron decreased by 5.3%, and technology investor SoftBank Group declined by 6%. These downturns reflect investor concern about the potential disruption DeepSeek's cost-effective AI model could pose to established tech companies. While the details of China's technological progress remain tightly controlled, experts believe this advancement represents a significant leap in AI capabilities, likely focusing on advanced areas such as generative AI, machine learning, or the integration of quantum computing. The announcement has ignited discussions about the broader consequences for global AI competition, emphasizing the race for technological dominance between the two largest economies. Now, just a day after the market turbulence caused by DeepSeek, another Chinese firm claims to have made a breakthrough. Alibaba has unveiled its latest artificial intelligence model, Qwen 2.5M Max, asserting that it outperforms leading models such as DeepSeek V3, OpenAI's GPT-4, and Meta's Llama 3.1. Alibaba, one of China's largest technology conglomerates, is a global leader in e-commerce, cloud computing, and artificial intelligence, founded in 1999. By Jack Ma, the company has expanded its reach into various sectors including digital payments, logistics, and enterprise solutions. Alibaba Cloud, its cloud computing subsidiary, has played a pivotal role in AI development, supporting businesses with large-scale computing power and machine learning capabilities. DeepSeek has recently disrupted the AI industry with its cost-effective models, notably DeepSeek V3 and the R1 reasoning model, launched on January 10th and 20th, respectively. These developments have prompted significant responses from major tech companies, including updates to AI models by ByteDance, Baidu, and Tencent. In this video, we will examine the effects of recent developments on the US market, exploring the reasons behind the sharp decline in US stock values. We will also offer detailed insights into DeepSeek, the innovative Chinese technology that has captured worldwide attention. Additionally, we will analyze why US policies aimed at limiting China's technological growth have not produced their intended results. China crashes US stock market. On January 27, 2025, US financial markets experienced a significant and historic downturn, primarily driven by events in the artificial intelligence sector. A major factor behind this turmoil was the announcement from the Chinese startup DeepSeek, which unveiled a groundbreaking AI model that raised concerns about the competitive landscape for American technology companies. This event not only caused widespread anxiety in the tech sector, but also led to a broader reassessment of the US's position in the global AI race. NVIDIA, a dominant US company in AI chip manufacturing, has experienced the most substantial losses. On January 23, 2025, its stock was trading at approximately $143, but by January 30th, it had plummeted to $118.68, marking a staggering 17% decline. This sharp drop wiped out nearly $600 billion in market capitalization, the largest single-day loss for any company in US stock market history. The market's reaction reflects growing concerns that DeepSeek's cost-effective AI model could challenge NVIDIA's long-standing dominance in AI hardware, potentially disrupting the high-cost business model of US firms relying on expensive GPUs. Microsoft also suffered losses amid the DeepSeek-driven turmoil. The company's stock, which stood at $441 on January 23rd, declined to $448 by January 30th, reflecting a 6% drop. While Microsoft's AI and cloud computing ventures have been key drivers of growth, its latest earnings report revealed disappointing cloud division sales, compounding the negative market reaction. Investors appear increasingly cautious about the sustainability of AI-related investments, particularly as competition from cost-efficient alternatives, such as DeepSeek, intensifies. While companies like NVIDIA and Microsoft struggled with significant losses, Chinese firms experienced modest gains, reflecting investor optimism about the country's growing influence in artificial intelligence. Alibaba Group Holding Limited saw its stock rise from 96.4 on January 23rd to $100.18 on January 30th, marking a 4.9% increase. This upward movement aligns with the company's recent unveiling of Qwen 2.5M Max, an AI model designed to compete directly with DeepSeek's groundbreaking advancements. Investors appear to be responding positively to Alibaba's proactive approach to maintaining leadership in China's AI race. Similarly, Baidu Inc., a key player in China's AI and search engine sector, saw its stock climb from 89.4 to 94.4, reflecting growing confidence that Baidu will continue to thrive amid heightened AI competition. Meanwhile, JD.com Inc. experienced an increase in its stock value from $40 to $41.44, marking a 3.3% rise. Although JD.com is primarily an e-commerce giant, Its investments in AI-driven logistics and automation have bolstered its position in China's tech ecosystem. Investors may be factoring in JD's potential to integrate emerging AI technologies into its retail and supply chain operations. The market shock was triggered by DeepSeek's announcement of an advanced AI model that reportedly matches or even exceeds the capabilities of leading models developed by US firms like OpenAI. What distinguished DeepSeek was not only the performance of its model, but also its cost efficiency and innovation. Unlike its US counterparts, which depend heavily relying on cutting-edge hardware like NVIDIA's high-performance GPUs, DeepSeek achieved its results using less advanced and more affordable technology. This revelation cast doubt on the sustainability of the high-cost development strategies employed by US tech companies. Investor sentiment reflected this uncertainty, with widespread sell-offs indicating a re-evaluation of the long-term valuations and growth prospects of American tech giants. The emergence of DeepSeek's model suggested that innovation could flourish even under constrained conditions, challenging the assumption that US companies maintain an unsaleable lead in AI development. Let's take a quick pause. If you've enjoyed the video so far, could we ask a small favor? Hitting the like button helps us reach a broader audience, and sharing your thoughts or feedback in the comments makes an even bigger impact. Thank you for watching. Now let's dive back in. What is DeepSeek? DeepSeek, a Chinese company founded in 2023 by Liang Wenfeng and Hong Zhu, has recently made a significant impact with its groundbreaking advancements in artificial intelligence. Although it was relatively obscure until now, the company is rapidly becoming a major player in the tech industry. DeepSeek specializes in developing highly efficient and powerful AI models, and their latest creation, named R1, is gaining attention for its remarkable capabilities. R1 can comprehend and generate human language with exceptional accuracy, rivaling models like OpenAI's GPT. It can also process and interpret visual data, such as images and videos, making it highly valuable for applications like self-driving, cars, security systems, and content moderation. What makes R1 even more impressive is its cost efficiency. Unlike large US companies, DeepSeek developed R1 using less advanced hardware and domestic technology, keeping costs significantly lower while still achieving outstanding results. The company's founder, Liang Wenfeng, has a strong engineering background and previously co-founded a company that used AI to make smarter investment decisions. This earlier venture helped fund the establishment of DeepSeek. Liang's vision for DeepSeek focuses on making cutting-edge AI both accessible and affordable. DeepSeek has taken a bold step by making R1 entirely open source, allowing anyone worldwide to use, modify, or build upon it for free. This approach challenges the traditional practices of US tech giants who typically keep their AI models private and proprietary. The release of R1 has disrupted the global tech industry and financial markets. Major US tech companies like Microsoft, NVIDIA, and Meta lost significant market value following R1's launch, with combined losses exceeding $1 trillion. NVIDIA alone saw its valuation drop by $600 billion. DeepSeek's success has sparked discussions about how rapidly China is advancing in the AI race and what this means for the future of global technology. Despite its achievements, DeepSeek's rise has not been without controversy. Some experts have expressed concerns about potential government influence on the model, particularly regarding sensitive topics. Additionally, while the open-source nature of R1 encourages collaboration, it also raises questions about how the AI model might be used, including for unethical purposes. DeepSeek's innovative approach and swift development have made it a serious competitor in the AI sector. By demonstrating that groundbreaking advancements can be achieved with limited resources, the company has shown that the future of AI may not be exclusive to those with the largest budgets. Whether this marks the beginning of a long-term shift or merely a temporary disruption, one thing is clear. DeepSeek has captured the attention of the global tech industry. The market has seen a slight recovery, but its value remains significantly lower than it was a week ago. What is China's Qwen? 2.5 Max? Alibaba has recently introduced Qwen 2.5 Max, its latest artificial intelligence model, claiming that it surpasses leading AI systems such as DeepSeek V3, OpenAI's GPT-4, and Meta's LL3145B in various benchmark tests. The release of this model highlights Alibaba's continued push to establish itself as a dominant player in the AI industry, responding directly to the rapid advancements made by emerging competitors like DeepSeek. According to Alibaba, Qwen 2.5 Max exhibits enhanced performance in natural language processing, demonstrating superior comprehension and contextual understanding compared to its rivals. The company has made the model widely accessible through Alibaba Cloud, allowing developers and enterprises to integrate it into various applications and services. This strategic move aligns with Alibaba's broader vision of expanding its AI ecosystem and competing with both domestic and international companies.